Hello, everyone. Welcome to the night session. I'm Rob Smith for Smiths in the Black here at T3 Live. Everybody hear me and see the charts? All right, cool. Tom? Okay, great. What I'm not going to do tonight is totally beat a dead horse, but because everything is should be archived where you can watch all the ones going backwards. So I'm not going to droll out what I've already shown a lot of people, but for the benefit of new people, I certainly am going to show you some stuff, and then we'll have some good conversation about the triangles, the timing strategy that I talk about when I come to the main room, and what my guys already know. And I do want to open up earlier than I have been for a question and answer session, because one of the reasons I did this is when I see in the main room, I see a lot of guys struggling and yelling and screaming how this is so hard, and we're seeing a pretty good trading market, and we're seeing things acting fairly orderly, and so I want to figure out what's going on. So it's either people are not sticking to their strategy, they're not having their discipline. Happens to everybody. You don't have a strategy. I just think it's going up, because sometimes I have no idea what people are doing, and I want to help them, and they're like, "Oh, it looks like it's gone too far." And like, well, you got to define things. What does that mean? I mean, things can go pretty far, right? So you have to define things, and so I want to open it up to questions and answers to what people are thinking, and put our heads together for that. Other than that, either you're using the wrong strategy by not knowing what market conditions are, by not changing your different strategies, or you only have one that only works in certain conditions, and then we're going to work on that too, because a lot of the questions I get are from people who are like, what do you think of this moving average doing that? And I don't use moving averages. I can, for me, and if it works for you, like I said, if anything's working for you, by all means keep doing it, or keep it in the arsenal. I don't. For me, from all the research I've done, moving averages, I can look at a chart and tell you whether I think it's going up or down, or whether the trends are up or down. I prefer candlesticks and different time frame levels. Reason being, at least from my research and how I do it, is that different levels show where different participants are jammed, where they are wrong, or the momentum. And that's why I always talk about having as much probability on your side. I want the monthly going my way. It's like this week when we have this really important 125 level just below on the SPY. And yesterday opening right there too. It was the opening of the month. It was the opening of the week. And the opening of the day. That means whichever way we go, we have 3 time frames to break from. Now, it might vacillate around there, which it had, but we had reason to believe it was going down. And that means that the most participants are jamming the thing down. And I'm seeing people, I'm going to buy this, I'm going to buy that. I'm like, well, for a scalp. I'm like, well, you're better off going in the way of the momentum, and we're going to get to a little bit more of that coming up. Basically, like when you let's look at the SPY. Let's get to the SPY here. And I'm going to show you a few things, because I want to get for the new people the triangles and the inside bars and what I'm talking about. It's these trend lines. I want to get rid of these real quick. One of the things I talked about to start this week was the potential of looking at a channel like this, and absolutely positively how important this 125 is as the opening of the month. And as it so happened, just about the opening of the week. Why? Because we're still in an inside month. That means we're not trending. And so in order to establish a trend, we needed to take out last month's highs. We haven't done that. So now we're stuck in the middle, where we could have another inside month, not taking out 128 nor 116, although 116 looks like a target, but we don't know. Let's go to the monthly. Three lower highs on the monthly, opens right at the 125 and drops. But it's still an inside month, so there's no trend there. It might seem like one when they're jamming them down, but it's still well within the last month's range. And granted, people are like, oh, that's going too far. I'm like, well, maybe you weren't here in November, or maybe you weren't here in October when it did this. They can tend to go pretty far. In the grander scheme of things, we haven't really gone that far, and we're going sideways. So if we go back to, I'm going to go real quick about the introduction to triangles, and I'll get to more of them. But on the monthly, what you need to understand, and I'm going to break it down to different time frames. What you need to understand, first of all, very important that you probably don't hear about from a lot of people, but you absolutely positively have to understand that equities trade in inverted triangle patterns. The way we validate that, to prove that, is we take long-term charts and break it down into short-term charts. If they continue, that we know that these patterns are working and that they're still alive. Here's the monthly spider going back to the 90s. And I know for some people we've been through this, but I'm going to get through this as fast as I can. Here you can see the monthly inverted triangle pattern. Here's where we are now, 122. And when we stalled there today, this is an important area, 122. If we take this line back to the 122, 99 lows, coming up the 2000 highs, lows of 05, first stopping point before the big dump, high before the flash crash, and right here. And we're right in the middle of this triangle. So if you think this is volatility, you ain't seen nothing yet if we either try and attempt to take the top out of this or the bottom. If we shrink this down to the weekly, it formed another one within the larger triangle in 09, right in here. Flash crash high. Before that, here, flash crash high, post flash crash low, back to the recent highs, apex of the recent triangle in here. And if we go down to the daily, you see this here, and they happen in much shorter term time frames. You'll see them all day long once you start looking for them. And I'll get a little bit back to that, but let's get this back to where we can see it a little tighter. Here's our daily SPY. Get rid of these trend lines. You might remember another pattern that we were looking at here. Patterns tend to repeat in different things, and as you listen to me more and more, you'll see that. But you might remember the October rally here in SPY. Comes up, forms this, some people call it a wedge, some people call it a triangle, symmetrical triangle, but you can remember this. Daily hammer, looking for a big launch pad, right? We're going to new highs. It's going to be great because we're coming from here. Hammered, got up there, could not break this, fell apart. So as we looked at this today, yeah, Andy, I'll get to the questions in a little bit, but yes. So if we look at this, right? Everybody's got a good look at this. Let's take a look at today, crude oil. Big rally up. Looks like a nice triangle consolidation. Hammer. Can't make it to the top. Wham! Coming right down. That was bad, especially because a lot of people are trying to watch the OIH, which certainly needed confirmation. OIH here having some problems. But as soon as you see that, you need to get out. You need to know that oil is really going to tank, and that stuff like this is going to have a hard time. OIH here, monthly, taking out the inside month. And the importance of the inside bar, as I go along here, you're going to see, is it represents an equilibrium between buying and selling. Both sides are equal. Okay, no one's winning right here, and somebody's got to take it. It's either got to continue the trend or reverse it. Or, if it takes out both sides, it's expanding, and you'll see a triangle start to grow. So one of the things we want to look for when we saw the USO breaking down and the SPOOs breaking down is that we go into those oils, and we knew monthly stuff, Diamond Offshore, monthly descending triangle, inside month breaking down, CVX we had on the list, Shooting Star Daily here. So when we see the daily, and certainly for many, I'm sure everybody's done this, it looks real simple on a daily chart, and then you get in there during the day and I'm like, how do I do that? It chopped around. It doesn't look as easy as it is on the daily, and everybody knows that, right? So what we use is inside bars to time entry. So it opened, rallied back a little bit, but was still below the shooting star, which confirms the down move. Inside bar. Now this is a hammer, but it was inside the previous range. And I know I'm looking to sell this. Short it when it breaks the inside bar, stop goes here. It may never look back. I've got the daily time frame going my way, and I know exactly where my stop is going to be. Another thing you want to know when we know that oil is under pressure, we know that oil is at risk of a big drop like it was today. Some people's first thought is short oil. But oftentimes the first thought, which didn't work completely well, but at least in some cases, is go to the transports, the guys that use all the oil. JetBlue we knew was in a triangle, but although getting towards the top of it, inside day spiked up just a little bit, but we've known this triangle. But we're looking at all the airlines, the guys that really use up all the oil, and the real blaster was Alaska Air. Gaps down, straight up. This was a 15-minute bar that closed yesterday. As soon as it comes through there, it's an engulfing pattern. Stop goes there, boom. And I'm digressing a little bit there, but if I go back to also looking at, to make things clearer, when you have inverse ETFs, oftentimes charts can be a lot more clear there because they're a little more volatile. This is the ProShares Ultra Short Oil and Gas. Now, if you're thinking that these stocks were going to go up, this needs to break down. And you can see this is a weekly chart, the massive amount of support here. This absolutely needs to break and break hard if oil stocks are going to go up. This is Doug, DUG. And you can see the massive amount of support there. Some of the stocks people are talking about too. Okay, sorry, it's just off the screen. Talking and asking me about where there's triangles. Okay, I'll speak clearly and make sure everybody knows what I'm looking at. Let's take a look at Google. Here you can see the daily triangle. And once again, for the newer people, I want to be clear that when you're looking at triangles or any technical pattern, what I'm trying to decipher is what are the participants in their thinking that is creating the pattern. It's not just, it's not just identifying a triangle. It has to be set up for some reason. There's got to be a reason that happens. And oftentimes what is happening, and why we're seeing it in the overall market and over again, is you have two market forces that are getting more desperate as time goes on. You have shorts and longs, and in a bigger sense, you have institutions that have to be long when things go up, and you have guys who are very aggressive short sellers who are ready to jump on the next debacle. And every time it goes to a new high, you got buyers. It collapses on them. All right, now we're going to break new lows. We're going to short here. Boom, right back up to them. Buyers in here, No shorts, boom, we break to new lows. Shorts get aggressive right here. We finally got them. We're breaking to new lows. Bam, back up, and this continues to get worse. Anybody who's ever traded knows how this goes down in a very short time frame. And as time goes on, these expand and get bigger and bigger, and that's why we see it on the monthly SPY. As far as Google's concerned, here you can see the inside bar day. What it did here was form a reversal strategy. And I talked about this last night. What that means is when there's an equilibrium, inside bar, both sides are neutral. Buyers couldn't take it to new highs, sellers couldn't take it to new lows. Somebody's got to do something. Somebody's got to take the side. So at this point, the trend appears to be up, goes to new highs, and why would it reverse? It's going into new highs. But it comes ripping back down. Shorts are gone. Comes back into the range. So when it breaks this, that means buyers attempted to take the stock and failed. When it breaks that, sellers are now trying to take the stock, and it falls back into the triangle. So usually, depending on your expertise, and we can get into different stuff, when we get to questions and answers or whatever, usually when you hit the side of a triangle, at first you don't want to try and fade it and go back in. You just want to cover the other side. Like if you're looking to get short, once it pulls back into the triangle, breaks down here, then you cover, and then look for buy signals once it pulls back into the triangle and is defined. Otherwise, triangles will expand. If we go back to the SPY, 30-minute triangle we've been watching for a while in our room. It's a little bit of spaghetti here, but I want to make sure everybody this is in here. We identified it up here. New lows, new high, new low. Test the high. We have a triangle here. Since we've been walking down this, here, and you can see it's getting a little bit worse. These trend lines were getting worse. So as triangles expand, they don't always go straight to the line. Sometimes they penetrate it, and that's when things really start to get going. And that's what we saw here today. Everybody's looking for a rally. The problem is these lines that were support became resistance. Could not get through. That's bad. So triangles can also expand. Another stock that we talked about, Amazon. Talked about it yesterday, and we're going to talk about it today. Amazon, I'll shrink this in here. You can see the larger weekly triangle. I'll shrink it down a little bit. Now, we were looking short side yesterday for a shot at going to the bottom of the triangle towards 170. Reason being, inside week. And the inside week got taken out at 188. What that means, once again, buying and selling was equalized. And as soon as it breaks 188, anybody who bought it in the previous week is now wrong and has to make a decision on whether they're going to hold it or get out. At that point, we break them down to the 15-minute chart. As it broke to 188, inside bar right here. Short, stop goes here. And there's a lot of nuances on how to do that, but on how to continue it, how long to take it, whether to double, stuff like that. But I want to get you the basic stuff and get to more questions because I want to find out what's going wrong with some people and what they don't understand about this. Now, Amazon comes down on the weekly to support. We know this triangle exists. But to just blindly go in there and buy it, I don't know if this triangle is going to expand. So I want to be able to know my risk. I want to tighten my stop up and not just some general area. I want to have a reason. So once again, we go back to the 15. Comes down to support inside bar right here on the low, 15-minute. And you can use any time frame. Shorter term time frames will help you tighten up your stop. Boom, up, up, up. And, guys are trying to lean on it, hoping that it rolls back over. Maybe it does, maybe it doesn't. Here was your spot, inside bar again. If it's going to roll over, it's going to drop there. 60-cent bar. Gets you back in or buys you more. 177.75. And when I talk about trying to tighten things up, I want really tight bars. Here's Avon Products. We caught on the desk today here. 3-cent bar. I'm risking 3 cents, give or take slippage. But that's why I'm talking inside bar. I want this thing, it's lower than it opened, which means the daily is red, and I've got a 3-cent bar. That's my risk. All it's got to do is continue on its way, and it did. Another one, people were talking about Cat Tractor, and this is a triangle we've been watching for a long time. Cat's actually a series of triangles, but why are you not there? Not out far enough? There we go. Here's Cat's triangle going back to July formation. Oh, it's coming down. No, it's coming back. No, it's going to new lows. No, it's going to new highs. No, it's going to new lows. No, it's going to new highs. Then it forms another triangle. And what we'll look for is these triangles when things cannot get above. Stall out on resistance. Inside day up here. That's all she wrote. So like I said, I have a lot of stuff archived already. And I've already talked for quite a while. So I do advise everybody who has not been here every night to watch some of that stuff on your on your relaxing time off. But for right now, I just want to open it up to questions because I know I've gone through a lot of things that I've repeated, and I don't want to do that too much since it's archived, and I know a lot of people have come back. So at this time, does anybody have any questions? Can I just point to a bar? Am I talking about the moving average? Okay. No, I'm not using moving averages. I'm using inside bars combined with different time frames. So let's take a look at something like, let's see. The Amazon was a combination yesterday of an inside 15-minute bar and an inside week break. Right? Earlier this week, we did RRC. Here's RRC, inside week. And the low of the inside week, 67.24. Inside day, low is 67.55. If it takes out the 67.55, I know it's got a good shot to take out the week. And it certainly did. Boom, 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 boom. One of the most important things about not just levels, but understanding why the different time frames are important. When you see a monthly move, a monthly bar, that's longer term, outside of, using quarterly and stuff like that. That's longer term. That means longer term players, institutions are either buying or selling something. Most of the people, the herd is going one way. Then the weekly confirms that and say this is a particular week where they're hitting it. If it's going down and it's red for the month, it's red for the week. Each day then becomes more interesting where I say, all right, where things open. I don't care if it's up or down for the day. And I don't quote stocks by how much they're up from the previous close. I quote my quoting system shows me from the opening. I don't care if CNBC tells me IBM is up $4 when it opened up $6. It's down $2 to me. So the monthly represents the institutional and bigger players. The weekly confirms that and also adds into swing trades and traders like us. And the daily is everybody plus the real short-term guys, and then you break it down to the 15-minute, 5-minute, 1 minute, so you can time these things and have and limit your risk. Inside bar equilibrium, and they happen all the time. Right around certain levels, you know exactly why you're in and what you're risking. So here's your inside bar there, Shaky Bud. Inside the previous range. Very tight, which means if she took out the top here, shorts might want to cover. But here, long's got to dump. Andy's asking me if I use horizontal levels at all or just triangles. Certainly, anything that's important. That the reason that you want to watch for these triangles is because of when I show the Goog chart, or especially the cat chart. If you don't recognize these things, the moves get more violent as time goes on. The pattern expands. It gets bigger. It gets worse. And so when things are looking great and you're like, oh, it's going to new lows, I'm short here, I can let her pop up a little bit, right? And it's just going to roll back down. If you don't know this is a triangle, you got murdered right here. Bam! You need to know that this pattern exists. Because it'll suck you in thinking, oh, it's going to new highs, I'm long. I don't care if it drops a little bit, I'm still good. Wrong. You're going to get murdered. Yeah, Coop, Amazon's interesting. We just got to see how this market plays out, and it's still red for the month and red for the week. So although it reaches a certain level and is a hammer on the day, right? Here you can also see that inside bar, then on the 15th, then turn the day green. So I want to wait a day or wait for it to turn green, because at least if I have an inside bar against a red month and a red week, at least I still have the daily and the intraday going my way. That's 2 of the 4 time frames going my way. That's not that bad. It was like in GMCR. And people were shorting that today and going, I don't get it. And I'm like, look, it went green for the day. Now you got 2 time frames going against you. And this happened to be one of the great plays of the week. Inside day bar, short, bam. That was the play. If we went back to the 15-minute, it was absolutely gorgeous. And I'll show you why it helps you get into things where otherwise you think you're way too late. Okay? So the inside bar broke at 55 and change up in here and just fell apart. Now, though we're inside 5 minutes and stuff like that, but let's say that you're looking at it and you're like, well, it's already dropped, $3. I'm not shorting this thing, right? Then it pops up in here, gives you a 15-minute inside bar with a low of 52. That's $3 below the break. And a high of 52.63. That's your risk. 64 cents or whatever. Boom. You caught all of that. All right? And that's something normally you wouldn't do unless you know how to time things where you can limit your risk. Because I'm seeing a lot of people that I don't know. That's why I want more questions, because I'm going in there. I have no idea why people are doing things. Being like, oh, it looks like it's gone too far. Or I'm buying this for a scalp. I don't know what that means. And I want to help people, but I just want to know what that means. Because when I'm talking to my people that understand, they know exactly what I'm talking about. When I say it's inside here, it's this is the level. They know exactly what I'm talking about, and they know exactly what it means. And we have that's very clearly defined where your stop is and why you're in. Making sure I didn't digress off a point here. Hold on. Oh, Amazon. Sorry. So Amazon, right. So Amazon may be closer to a buy here, sure. The weekly. The problem is there's also potential this one. We start breaking through this. Now we're looking 120 and change. If we look at the monthly. Shooting star, break. Now we don't know. So preferably what I want to do is at least wait until next week to try and get or turn the week green to counter the month. Because right now, inside bar break to the downside. Yes, we're here, but the longer term time frames are still to the red. If we take out the daily hammer tomorrow, like I said, you have 2 out of the 4. But if it breaks down in here and starts getting smashing here, then I'm going to go back to having 4 time frames going my way. The monthly, weekly, daily, intraday. And that's when you can get the real smasher down into there. So you have to be careful, and that's why you can use the tight inside bars to limit your risk and say, I'm willing to risk this, knowing certain levels are important. Like tomorrow, the daily. If it's above the hammer and it's above the opening, and I got a tight bar, I can take a shot for it to pull back into the triangle. Anthony is asking me, I talk a lot about 15-minute candles, and would I advise trading inside 5-minute candles? I certainly would. And the more active something is, like on the opening, we'll have 1-minute SPY, 5-minute SPY. The more active it is, the shorter term time frame you can use. Obviously, like I said last night, you don't want to use a 1-minute chart on Bank of America. But you can use 30 minutes, 60 minutes, anything that can get you in there. And one of the reasons I use 15-minute charts is because, and I've said this many times, but it's important to reiterate, and I'm sure everybody can relate to this, 15 minutes is about the attention span of the normal trader. And so when a bar goes inside for 15 minutes, that means either somebody's long, if it's going up, somebody's long, and it's stalled, and you're staring at it thinking, all right, it's stalled, either I'm going to take profits or at least take some off, or I'm short, and I'm looking at it, and it's against me, and it's sitting there doing nothing, that I'm going to make a decision whether I'm going to cover or not. So 15 minutes is really your attention span once you put something on that you're going to want to do something. You're going to want to take some off, or you're going to want to, something's going to happen. And so that seems to play out over and over again, and that's why I use 15 minutes. Where am I now? Okay. Rosemary, Molly Corp. Inside week, break. Shrink that down so you can see it better. Molly Corp traded completely within last week's range, the previous week's range. It means it becomes a sell below 28.37. It's now 27.10. So you try monthly, red. Weekly, red, potential triangle down here around 25. Daily, inside day to day, down. All right, looks like inside day here, bam. See that? Sorry, Rosemary, I skipped you there, but I got back to you. Anthony, am I trading off a triangle rejections only combined with inside candles? By rejections, do you mean when they reverse off the ends of the triangle? No, this is, I'm going to say no right away. This is just very basic. This is just 30 minutes of this. And I could talk about this for days. And this is what I do all day in my VTF. How they act. What does this mean? When it goes in, we're looking for measured moves as the triangle gets bigger. When the triangle's small, we pull out. We don't want to do it because it's going to chop you up. As it gets bigger, the moves get bigger. So we're looking for larger triangles. If that makes sense. Gabby asks, why are the triangles important? Why can't I just trade inside bars? You can. You can. This is helping gauge magnitude. How far are these things going to go? Because one of the problems people tend to have is to take the same amount of profits as losses. You want to know when to let these things ride. And so if we know we have a triangle working our way, we know it's expanding, we know we have a certain amount of time frames going our way, which gives us a higher probability of the trade working out. So you want to combine them all. I want to combine different time frames, monthly, weekly, daily, and intraday. I want to look if there's a triangle here involved, and where it is positioned in that triangle to gauge the probable magnitude. But when there is a choppy market, when things are really flashing around like they have been, 300-point swings or whatever, we trade just the inside bars. But I will advise and say low probability environment. Like when we were right around the 125 SPY, had no idea. Let's go back to that. I had no idea. We're an inside month on the SPY, right, and opened right around the 125. When we're here, I have no idea. We're either going to take these out, drop, I don't know. It's low probability. Everything's just sitting there right around the 125. I'm willing to go either way. I want to take my shots either way. And we had our bias, we thought, because of this stuff to the downside. But, yeah, oftentimes I'm going to say low probability environment. But I'm always trying to advise on the level of probability. Brett, let me see. Inside and down, up on the daily. Okay, let me see if I read this out loud. Brett asks, to be clear, when a stock goes inside and down up on the daily, you don't take that entry, but use that direction to then set up an intraday entry using an inside bar in the 550 in the same direction. Correct. And I think what you mean by down up is wait for it to confirm by taking that bar out. Then look, that confirms it, and then you look for the setup. Correct. Now, depending on, there's different nuances to it, but in general, that gives you a higher probability, yes, because you know you have at least two time frames going your way. If that is right. Coop says he's played 15-minute breaks and inside bars all fall, but find that my stopped out trades have taken all the money away from the winners. Right, and that's what's getting back to where I'm trying to gauge probability and when to hold and when not to. Now, because we're in an inside, we've had inside months. We've had a lot of daily reversals. Everything looks great one day, they look horrible. They're building these triangles. They're getting bigger. And if you look back, like I said, if you can time it to the triangle and having four time frames going your way and knowing to hold those longer than the ones that don't, I think that's what I work on with my guys all the time. Hopefully that makes sense too. Webbs wants me to look at CAT again. Cat Tractor, right here. You see this was December 5th, inside day. So as a swing trade, as soon as it breaks below here, I'm short with a stop up here, knowing that for one day's range, I'm looking for this. For at least this little triangle to kick in, which it has, down to 85 or better. What's unique about this week, and unfortunately the VIX is low, but we still are seeing some volatility, is what we want to do also is time this with expiration. You have a tight inside bar, and you only have 3 hours until options expire. Now, in a normal, complacent environment, stocks will tend to go to their strike. But when you have a volatile environment, it might seem like that, and then things explode. And that's a webinar for another day, but how we tie these with options. If that made sure, Webbs, was that clear in the cat? The wick of the bar? The wick of the bar, it's the entire day. It's the entire day. So, yeah, because what it means is that we couldn't go to take out either side. As long as it traded there, there was somebody there. There's somebody trapped in there. It might not, and you could do volume analysis on that, and that's why we try and I do as much as I can to try and gauge the probability. But no, the whole day's range counts. TNA and TZA, sure. Let's take a look. Say, well, here you go. Here you can see your long-term support here in the TNA. Triangle up here. Came smashing through and expanded that. So now the key here is this support here. And after it broke, new high, new low. And this is what your triangle's looking at right here. Working on the apex. The apex is very important. Right now it's trying to break south from the apex. And as I've talked about financials, XLF. Weekly apex is 1275. Now we're back below that. Apex is very important because right in there you've got the most shot at going one way or the other. It gets very choppy around an apex, and that's why the 122 is so worrisome when I go back to the SPY. Right here, you should be getting killed. You should be getting chewed up. But if you can time it using these inside bars, you know your risk, and when you're right, they go. And nothing says that more than Amazon or GMCR, any of these things. Anything that's really moving, these will help you get in there instead of just jumping in there. Being like, oh, it looks like she's going, better get in there. Oh, it's gone too far, better fade it. No, have a reason. If you get stopped out, so be it. Dibber, what bar would I use for trading price line? Like I said, usually 15s. There you go. Want to see a butte? Let's go see a butte. There's a butte right there. Butte. Right there. That's XLF. I was going to say, man, that was going to be awesome for Priceline. Let me see. This looks pretty good. 41.43, 50 right here. Inside bar right there. Bam. And then it starts to break here, and you can see how guys get shaken out and be like, oh no, oh no. There's your inside bar. Boom. Instead of having a big stop on this thing, tight stop right there. See you later. The triangle, when they get bigger, then there'll be consolidations within there that can form measured moves. And they tend to get bigger as the triangle expands. Does that help, Dip? Let me make sure I'm getting anything. Okay. Back to the Molly Corps. Here's this weekly, depending on, and you could also go off of this. Believe me, I draw a ton of these things. So for there, but in here, in order to look good again, either needs to form something bullish on the bottom and then give me a tight range to get in, or retake the apex here, looking high mid 30s. And today on the daily, inside bar here. Yep. So problem is we got a gap, and we can go into gap analysis. That's a whole nother ball game. But what you want is when it gaps to continue. So it becomes a short by gapping, but the gap burns up some of the power, or can. So you want to make sure that after it gaps, that it's below that gap to give you the signal. Mosaic daily chart. Mosaic is looking like, let's take a bigger look at it. Okay, this one, and you'll also notice that I draw a lot of my triangles to infinity. As you can see right here, boom, boom, tried to expand it, comes back in, boom, right back to here. And this can happen too. They can fail, like I said, can't make the apex and roll back down. Like I said, there's going to be a lot of nuances, but this, let's make this a little bit bigger. And here's a perfect example of how it expands. Here's the first triangle in here. New lows, new highs. I'm drawing my triangle. Uh-oh, it expands a little bit. Comes back in here. Uh-oh. Now I know I'm right. I'm shorting it. Oh, no. It's going back to new highs. Doesn't make it. Oh, no. And this is a perfect example. So at this point, it's a little erratic. It's trying to expand, then gets a little more orderly again, but just kind of walking down. And that's why, right or wrong, as long as you time it with what I'm talking about, you limit your risk and take your shot where you need to be. And as like I said, as opposed to doing naked stock when options are at a high premium, you can use the bars to time in options where you know your risk if when it goes around a strike. Yeah, Don, answer Andrew. Andrew, I don't like to hear that, so we're going to take care of that right away. That's Jerry asked me, can triangles be converging to a point instead of expanding? Of course, there's symmetrical triangles, and you pay attention to those too. Just like I pointed out in the morning, or at the morning. Sorry, it's been a long day. Earlier in the session, the USO daily. Here's stuff like this. So yes, they just don't exist as readily as they seem to, say 15 years ago. This just continues. They just continue to be part of, larger inverted triangle patterns, and they get a little tougher because they'll rip and then tend to come back in, and then form larger triangles. So they're a little bit tougher to play. And what you would use those for, just like a convergence in tight Bollinger Bands, we've had a VIX so high for so long, we haven't done these type of plays. But when you have that's what you're looking for, is a triangle like that to put on a straddle, where you don't care which way it goes. You just want the option premium to explode, as opposed to trying playing naked stock and something like that. All right, we're getting some things. Okay, Webbs on the top. When do I buy in Cat 1? When would you cover? Well, it all depends on your fortitude, and there's a lot of different ways to go about that. A different strategy, but one basic strategy you can use to try and stay in things is like when we have those tight inside 15s or whatever. Is take the measure of this bar, and once it travels that distance, you can take off half and either stop yourself even or stop yourself the other half. Here it's a free position outside of a gap, obviously, but that way you're still in it. You got some on, and then you can look for another setup to re-add or pour it on. But I'm not going to talk about too much more strategy. I just wanted to get the basic concept. So when I'm talking in there, we'll have more time. Like I said, I'm trying to do this through the end of the year as much as I can. And you're always welcome to join me during the day, and I try and pop in the main when I can. So I hope that part helps. And yes, inverse ETFs have time decay factor. Yes, they do. If I get a confluence of a triangle line with the previous price congestion, sure. Oh yeah, everything enters into it. When there's a price congestion, that's just another group of guys that got to pick a direction. So usually that's part of the triangle, as you'll see as time goes by. It depends, Anthony. No, I think more is better if you're fast enough. But you have to I have monster lists of inside days and how they tie up with inside weeks, and like just this week was a massive amount of inside weeks, and just break. Andy asks, do I base most of my triangles off a weekly or monthly chart? Every time frame, man. I'm going through them all. Every single night for over 20 years, I go through almost every stock in the S&P and a few more. Monthly, daily, weekly, 60, 30, and 15s. So I have this as well in my head as I possibly can. So it makes it a little bit easier for me on the fly to know what things look like when I'm talking to the folk. Anthony asks, when I said this before, no, once it gets to the triangle, it's usually a cover. Cover the direction if you're still short or long when it gets there. Then look for the reversal. And Rosemary, TZA. Okay. TZA is just going to be, somewhat the inverse, but we'll look at it. That's why I said you always want to look at them, see we see anything different. And once you can see that decay, but just like the dog looking at some support, it would have been nice to get to this inside candle, but it wasn't quite. But you can see the support, so you would break that down, knowing that there's support there, looking for an inside day or the break. But we don't have too much monthly stuff going on because it's just like the SPY. There's not, we're just trying to break one way. Barkley asked, do I use Bollinger Bands on our charts? Yes, I do. Bollinger Bands I don't usually teach because they're pretty subjective on how to use them. For those who don't know, when they tighten up, you're looking for an expansion in volatility. When they widen, you're looking for a decrease in volatility. But there's something that you really need to use a lot of time frames on. And, they're more of a guideline than anything else. Hey, all right. And I think I'm going to wrap it up there. This is a pretty good session. And I'll be back again next week, and I'm on the desk and pop in, and we'll get to it. But like I said, it's archived. Let it sink in a little bit. When I call it out, take a look. Or when you're trading tomorrow, or look at anything you regularly trade, as soon as you see new highs, new lows, start drawing those lines, and you'll see these triangles develop. And as well as if you just go back today at anything you traded or wanted to trade and go back and look at the 15-minute bars, maybe break it down to fives, you'll see these things. And hopefully that's going to help you out, because this is my life's work, and it pains me to read stuff when I see people saying this is the worst month and I'm not trading well, and I'm trying to help and I'm not trying to be a jerk. Sometimes it's tough love. I'm like, what's the reason you're in? And people are frustrated, and I understand that, but that's why I'm here. All right, well, it's my pleasure. You guys all have a great night, and see you in the morning.